The opinions expressed on this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial advisor, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC. This is the Margie Shard Show on Super Talk 1570.
I'm Margie Shard, and you're listening to the all-new Margie Shard Show. I'm so excited to kick off this radio show today. I am in the beautiful Eugene, Oregon at the lovely Cumulus Stations. So thank you to the Cumulus Stations in Eugene. And I am here with the beautiful Julia Carlson, the CEO of Financial Freedom Wealth Management. Julia, welcome to the studio.
I'm excited to be here. Thanks for having me, Margie.
No problem. This is going to be fun. So for those of you, listeners who don't know who Julia is one of my girls. She owns a financial firm out in Oregon. She's got offices kind of all over the place, don't you?
Yeah, we do. My home office is in Newport, Oregon, and then we also have offices in Eugene, Corvallis, and Salem.
And I had not been to Oregon before, and you just took me through probably the most beautiful drive I think I've ever experienced.
You experienced the most beautiful part of the Oregon coast off 101 there. So, yes. Oregon is gorgeous.
Well, I'm excited to be here. You are listening to Super Talk 1570, and just so our listeners know, we do air this show each Sunday on Super Talk from 10 to 11 a.m., and we also have it available via podcast every Monday on our website at shardfinancial.com. To ask a question or talk to a financial advisor, go to shardfinancial.com and click on the Ask Margie a Question link. So the reason I'm out in Oregon today is because Julia wanted me to come out and talk with her clients about my new book, Financial Planning Exposed. So it's actually my first stop on my book tour, which has been kind of exciting. But I wanted to bring Julia in and really have a raw discussion about behavioral finance and retirement planning and also some tax strategies for 2015. So Julia and I, we both have the same broker-dealer, LPL, and we see each other all over the country at different conferences, and we always have these conversations. And so I'm really looking forward to having this because we have very similar businesses as far as our values and morals and how we practice and do things. And so this is going to be fun. So Julia, before we get started, let's just talk a little bit about you and why I think you're another financial expert. So you've had your company for quite a while.
Yes, I have been actually licensed for 17 years. This has been my only career, and I just fell in love with it at a very young age.
Which is something similar that we have because I started right out of college as well. And, I think one of the rare things in our industry is, one, we're female, which
yes.
There's never a line in the bathrooms when we go to conferences for the females, only for the guys.
This is true.
So that's always exciting to me. For the first time, you don't have to wait in line, but
and we're both 6 foot.
Yeah, 6 feet and blonde, and we also, to have really started right out of school is really odd for a lot of people. So, we're considered young in our industry, which I don't know if I feel young anymore, but so we have a lot of commonalities, and So, anyways, so Julia, I know you've got several offices, and one of the things that you've really has been really good for your career is you're actually an endorsed local provider for the Dave Ramsey program. Is that correct?
That is. In 2008, I found his material, and it was just life-changing for the way that I help my clients. It was very basic and easy to teach others how to deal with and play the money game, really. And so now a lot of what I do is teach the Dave Ramsey principles.
Okay. And something that was really great that happened with you last year is you were actually named one of the 40 under 40 for Investment News.
That's correct.
And
yes.
That was awesome. I mean, top 40 in the country. That's amazing. So congratulations on that.
Thank you. It was an honor. Yes.
You're the rock star.
Thank you.
So, Julie, I know that one of the things that, we do a lot of with both of our clients is financial planning. And one of the things that, and why I wrote my whole book about financial planning is because people just really don't have a good grasp of what financial planning is. And I think one of the things that kind of separates our offices apart from some other just advisors out there is we do that whole piece of planning. And so we're looking at people's income and their expenses and their debts, and then also the investment management piece. So one of the things, when we talk about your endorsement with Dave Ramsey, and I've used the program as well with my clients, is, he's got a really great way to get out of debt. But one of the things that clients really have to do before they do that program is they really have to be ready to do it, don't they?
Absolutely. One of the first things that when I am teaching someone how to get out of debt is I can teach you these principles, but I can't do it for you. And a lot of times they come in wanting that miracle pill, and it's just not there. So
because it's hard, isn't it?
It is. It's a lot of hard work. And you have to be consistent and persistent, and it just takes time and diligence to, work that snowball technique.
And one of the things you have to do as well is be honest with your planner. I've had people come in before where, they say they want to get out of debt, and we're going through their expenses, and they forget to tell me about some of their expenses, or they just intentionally don't tell me about some of their expenses. So whether it's vices, maybe they smoke or they're barbells, or maybe it's, they really don't realize what they're spending. I mean, we've had clients before that have had some pretty substantial surpluses when we run their budgets. We had one client had an $80,000 a year surplus, and they literally had no idea where that money was coming from. So I know what I tell my clients, but what do you tell your clients when you have that situation? You've had a client come in, they say they want to get out of debt. You're trying to help them. You're looking at their budget and you see that they have this big surplus. What are some of the techniques that you talk to your clients about?
Well, I think step one is we encourage them to write down over a course of a month what their expenses are. And a lot of times, I don't know about you, but between husband and wife, usually one of them is the primary person that's paying the bills, and the other doesn't really know a lot what's going on.
Well, and I find too that a lot of times either the husband or the wife is the spender, and then the other one is maybe more of a saver. And
yes.
So there's that internal fight as well. And also there can be some secrets there because the spender doesn't necessarily want to tell the saver what they're actually spending money on. And so sometimes it's easier just to say you're not sure where it went.
Yeah. What I do is I'll have the person that's more in charge of paying the bills actually write it out in a very simple format, and then encourage them to have a financial date once a month and actually go over the details and show the other spouse where all the money's going.
So, Julia, my husband and I actually have those monthly meetings. Sometimes it's every other month. We try to do it every month, but some months are more fun than others and it really depends on if the FedEx man or UPS man has come for my online shopping. But I read my husband a study one time and said it was this study that came out, and they said that people actually save money when they shop online because their time that's involved and everything else. But he didn't seem to think that was really the case. So, but anyways,
this is a very common conversation that I have with my clients. And what I have found that works is encourage them to each have a $100, $200 play money in their budget. That way they don't have to be accountable to the other for that portion of the budget. It just allows each person to have some freedom.
And freedom's important, I think. And, I talk to my clients about that a lot, too. You can have your joint account to pay the bills, but, you each really, you don't want to have to constantly be asking your spouse every time you go spend $10 here, $20 there, or whatever. So,
absolutely.
And the budget can also be flexible. I mean, I think the important thing is the budget can be flexible, but both parties have to agree. So if you want to move that vacation budget from $3,000 to $5,000, you can do that. You just have to both agree, and then you got to figure out where you're going to peel $2,000 back, from those other categories.
Exactly. And sometimes your budget will change month to month. So what we encourage is to have that financial meeting at the end or beginning of the month. And that way you can see what's coming in, what's your income sources for that month, and then what's going out that month.
I think one of the things that we have to talk about, too, is the fact that I know you probably have a lot of clients like I do that are on either they get commission checks or they're on all commission, or maybe they're business owners, and their income can really fluctuate from month to month. And so that can really create a lot of issues when they're trying to budget and stay within that budget or maybe pay off some debt.
Yeah, and I often see with my clients, it's a trap that you get into. If you have fluctuating income, it's like you're spending on credit cards before the money comes in, and it's hard to plan with that. So what we found is using the debt snowball technique that Dave Ramsey teaches, and the basic concept of that is you're listing out all of your debts, not including your mortgage. So from the smallest balance, you have a credit card that has $1,000. That would be your smallest balance. And you could have another credit card with $10,000, a auto loan, some student loans. So what you just list those all out from smallest balance to biggest balance. And with you're going to pay minimum payments on everything except that smallest balance. And so any extra income that month is going to be allocated to paying off that smallest debt. So
wonderful. Well, we're going to talk more about this debt snowball. And when we come back, we'll talk about that and also paying yourself first. I want to thank our sponsors, Rebecca Bartley with Icon Mortgage Lending, Christy Candleberry, the Christy Candleberry team at RE/MAX Grand, Jason Orton with the David Chapman Agency. And to ask a question or talk to a financial advisor, go to shardfinancial.com and click on the Ask Margie a Question link. And with that, again, we are in the studio with the beautiful Julia Carlson, the CEO of Financial Freedom Wealth Management, and we are in Eugene, Oregon at the Cumulus Stations. You're listening to Super Talk 1570. Stay tuned.
Margie Shard and her team can help you through life's transitions. Whether it's retirement, widowhood, divorce, or remarriage, call 810-714-5566 for a free consultation. With Shard Financial, you'll get answers and results. Her office is at 1537 North Leroy Street in Benton. Log on to her website at shardfinancial.com or call 810-714-5566 today. Securities and advisory services offered through LPL Financial, a registered investment advisor member, FINRA SIPC.
Looking for a mortgage loan and need someone that you can trust with the biggest financial decision that your family will make? Hi, I'm Rebecca Bartley from Icon Mortgage, and I have 17 years of experience in this business. I offer on-the-spot pre-approvals so that you can start the search for your new home. From zero-down rural development loans to conventional and veterans loans, I can make it quick, simple, and all understandable. Put your trust in me, Rebecca Bartley, and call me today to take that first step toward home ownership. You can reach me at 810-516-4227 or go to my website at RebeccaBartley.com.
Are you getting ready to sell or buy your home? Need some real honest advice? A realtor who will actually get real with you? No false promises, just plain good old-fashioned care, trust, and advice? Then you need to get Christy.
Hi, I'm Christy Candleberry of RE/MAX Grand. I have 20 years experience in this area, and the number one value I bring to my clients is trust and honesty. I get real with them, and I get them moving in the right direction.
Call 810-691-5914. That's 691-5914. Or go to getchristy.com.
Buying insurance doesn't need to be confusing. Jason Orton will answer all your questions and educate you on the product you're buying. Jason Orton is an independent agent with the David Chapman Agency. They've been serving Mid-Michigan with affordable personal and commercial insurance needs for over 30 years. Don't let insurance confuse you. Call Jason Orton at 517-319-8225 or log on to his website at jasoneorton.com.
I'm Margie Shard, and welcome back to the Margie Shard Show. I am in Eugene, Oregon at the Cumulus Stations with the beautiful Julia Carlson from Financial Freedom Wealth Management, and you're listening to Super Talk 1570. Julia, before we wrapped up the last segment, we were talking about the debt snowball. You're a Dave Ramsey endorsed local provider. Both yourself and myself have helped a lot of clients get out of debt using the Dave Ramsey method, what he calls the debt snowball. And I know we talked a little bit about this before we took our break, but when you were explaining the debt snowball, it's just to refresh our listeners' memories. Basically, what you do is you look at all your credit cards or all your debts that you have, and you pay the minimums on everything, and except for the smallest balance, you take any excess money you have and add that until that's paid off, and then you go to the next smallest balance. So, Julia, why, a lot of times I've got clients say, well, how come I don't, pay my highest rate first? Why don't you touch on that for our listeners?
That's a great question. I get that one a lot. And, this really comes down to behavioral finance, right? Like, the reason why you do that is not because of financial reasons. It's more for behavioral reasons. Families want to feel like they're making headway. So if you're trying to attack a $10,000 debt and it takes 2 years to pay that off, you're going to lose momentum, lose intensity, and give up. And it'll just make the snowball bigger, not smaller.
Well, and one of the things when you talk about behavioral and the momentum, I've had clients that really, we put a plan together and said, okay, within 2.5 years, you can be debt free. And they come back 6 months later and they're debt free. I mean, they've really gotten into this because they started to see some of their cards paid off. So they've either found things that they had to sell or had garage sales or, picked up another job. I mean, people get really motivated when they can start to see progress.
Yes, exactly. And that's what Dave Ramsey refers to as gazelle intensity. And, you get excited because you're seeing progress, you're seeing momentum, you're getting those cards paid off, and you're like, yeah, we can do this. And it also creates in the relationship between the husband and wife or the spouses, it's fun to see them working together towards this common goal. So it's really rewarding for me. I'm sure it is for you as well. It's just exciting to see them, making progress.
Well, I think the thing is when you can watch a client go from having a lot of debt to literally not having any debt or maybe just having a mortgage payment, it's a sense of freedom that they've never had. It's a stress that goes off of them that maybe they didn't realize how much that stress was really hanging over them. But once it's gone, it's almost like new people are created.
Yeah, I've seen that. It's financial freedom. It's peace for the couple, and it's just so awesome to see.
Well, one of the things that we have to talk about as well is really paying yourself first. We know that, it's important to get out of debt so that you're not throwing your money away to high interest rates. But one of the things that we see a lot are people that just are not paying themselves first. They may have retirement plans through work that they're not taking advantage of, or they're not putting any money in savings at all. What do you normally, what's the biggest thing that you see with your clients, Julia, out in Oregon? I mean, is it that they're not adding to the retirement plans, or they're just not able to save outside of their retirement plans, or is it kind of a combination of both?
Well, I think the biggest thing I see, honestly, is they just don't take time out to plan. They're just not paying attention to their long-term planning. There's just so much that we all have on a day-to-day that keep us so busy in our lives that if the most successful, families, clients that I see that are paying them first it's set up automatic, right? It's happening out within their paycheck in an employer-sponsored plan, or maybe they've come to me and I've helped them set up a Roth IRA, and we're doing that just automatically out of their checking account each month and creating that habit of paying themselves first.
Well, and when you talk about automatic payments, just to kind of backtrack a little bit to the debt for a moment, one of the things, I was actually sitting down with a client last week, and we were talking about the concept of why don't you just go into your bank account, set up an automatic payment to where every week when you get paid, a certain amount of money goes towards that debt, and you don't have to think about it, and it'll just be getting paid down. Because if you're not, you're not going to use your cards anymore, and if you're not going to be using your cards and you're automatically paying that down, then it's going to come down a lot faster. It's not going to feel so bad. You're going to get used to that new budget. So there's ways to pay yourself first, but there's also, when you think of automatic payments, they really can be really important. I know a lot when we went through the bad financial crisis that we had in 2008, 2009, a lot of companies that used to match in their retirement plans stopped matching. And so, I used to see a lot of people that weren't adding to their plan and they weren't getting that match. But now what I'm seeing, I'm still seeing that, when people first come in to see us. But one of the things we're seeing as well is our people are saying, well, I don't get a match, so I'm not adding to that plan. And I think that's a really bad habit to get, or thought process to get into, because it means typically you're not saving.
Yes, I've seen that as well. Yeah. And honestly, in that situation, they'd probably be better off setting their own Roth IRAs or individual plan set up so they can still
contribute and save.
Exactly.
Yeah. So saving is really important. Paying yourself first is really important. Making sure that you know what your options are through your work plans, and then also what you're eligible for through your, your plans with your financial planner. I know, Julia, you've talked about the Roth a little bit in this episode. We've also talked about, possibly traditional IRAs. Why don't you explain to our listeners the difference between the two?
Yeah, the Roth is a powerful account. It's where you can put money into a retirement account, a Roth IRA. The money that you put into it is after-tax dollars. So you don't get a tax deduction for putting the money in, but it grows tax-deferred, and then in retirement comes out tax-free.
Which, who doesn't want tax-free income?
Exactly.
I don't know about you, Julia, but I'm not a fan of Uncle Sam. I don't like him.
Nope, not a fan here either.
Okay. So not everyone can add to a Roth IRA. I know that some people make too much money, and there's a lot of, there's a couple different things that goes into play. So the IRS has rules based on how much money you earn and whether you have a plan at work, not whether you're contributing or not, but whether you have a plan at work. So and whether you're married or not. So there's quite a few things that go into that. So some people, may not be eligible for the Roth, but they may have a Roth 401k option that they could look at.
Yeah, absolutely. That's one thing to definitely look at that is not very common yet, are these Roth options within your employer-sponsored plan. So even though your employer may not match within that plan, if you can take advantage of a Roth, you could get, if you're under 50, put up to $18,000 a year into those things in 2015 here.
And then if you are over 50, you've got the catch-up contribution.
Correct.
So,
yeah.
So, okay, so we know that the purpose of the Roth is to grow tax-free income. Do you want to explain to our listeners what the traditional IRA does?
Yeah, so the traditional IRA, or also if you were participating in an employer-sponsored plan through possibly a 401k or a 403b, maybe the thrift savings plan, all those are going to be pre-tax contributions where you're going to put the money into those and not pay taxes currently on that.
But then have to pay once you pull it out in retirement.
Exactly.
Okay.
Exactly.
So there's a lot of different options out there. And again, depending on your income and what's offered at work, really, this is where financial planners become so crucial because we're able to run plans and look at different scenarios to see what really should be in your best interest long term.
Yes, I absolutely have to understand my client's tax situation, and looking at their tax return will help me identify what vehicle they should be saving in.
And one of the things that's so important is making sure that you know what is available for you and what options are available and really what is in your plan. So every plan is different. If you have a 401k plan, your spouse's 401k plan probably has completely different provisions in it. And really the only way to know all those provisions is to pull your plan document, which sometimes can be found on the website. Sometimes you've got to go to the human resource person at your work. But it really is important that you understand what's available in that plan as well as your financial planner so they can really help guide you as far as what you should be doing with those plans.
Yes, correct. And I also want to encourage, because I know both of our markets include a lot of small business owners. And there's some very basic small business retirement plans that small businesses can set up and get great tax advantages.
The SEP is a good for typically if you're just a family-owned business,
correct,
or just yourself. Typically if you have a lot of employees, you're not going to want to do a SEP. But between the SEP and the Simple, a lot of times for $40 a year, you can have a tax-saving vehicle that's going to save you a lot of money when we look at Uncle Sam. So.
We do a lot of Simple IRAs, which are just another small business plan.
Okay. Well, we're going to come back. And when we come back, we're going to talk a little bit more about retirement planning. We're going to talk about being emotionally ready to retire. This might be something that you never thought about. But, really, why is it so important that you understand what, if you're emotionally ready to retire, and some tips we'll give you there. I am again in Eugene, Oregon at the Cumulus stations. You're listening to Super Talk 1570 with the Margie Shard Show. And when we come back, Julia Carlson will join me again. To ask a question or talk to a financial advisor, go to shardfinancial.com and click on the Ask Margie a Question link. Thanks to our sponsors, Rebecca Bartley with Icon Mortgage Lending, Christy Candleberry with the Christy Candleberry team at RE/MAX Grand, and Jason Orton with the David Chapman Agency. You're listening to the Margie Shard Show on Super Talk 1570. Stay tuned.
Margie Shard and her team can help you through life's transitions. Whether it's retirement, widowhood, divorce, or remarriage, call 810-714-5566 for a free consultation. With Shard Financial, you'll get answers and results. Her office is at 1537 North Leroy Street in Fenton. Log on to her website at shardfinancial.com or call 810-714-5566 today. Securities and advisory services offered through LPL Financial, a registered investment advisor member, FINRA SIPC.
Are you getting ready to sell or buy your home? Need some real honest advice? A realtor who will actually get real with you? No false promises, just plain good old-fashioned care, trust, and advice? Then you need to get Christy.
Hi, I'm Christy Candleberry of RE/MAX Grand. I have 20 years experience in this area, and the number one value I bring to my clients is trust and honesty. I get real with them, and I get them moving in the right direction.
Call 810-691-5914. That's 691-5914. Or go to getchristy.com.
Shard Financial presents Backpack Night, March 5th at 6 p.m. at the Holiday Inn Gateway Center, sponsored by Chassé Ballroom and Latin Dance Studio of Fenton. Backpack Night is a fundraiser for a project of the Food Bank of Eastern Michigan, providing over 15,000 hungry children in Genesee County with a backpack that contains breakfast, lunch, and dinner each weekend and throughout the summer. You can help. Join us for Backpack Night, where you'll enjoy a strolling dinner, a fashion show, a comedy show, live and silent auctions, and more. Call 810-577-5291 or go to backpacknight.com for more information.
Stand out from your competition with a custom-made dynamic website from Shard Marketing and Branding, your small business marketing solution. Whether it's website design, social media management, referral marketing, event management, graphic design, community engagement, and business development services, Shard Marketing and Branding is your small business marketing solution. Call 810-577-5291 or log on to shardmb.com today.
Welcome back to the Margie Shard Show. You're listening to Margie Shard, and I'm in the studio in Eugene, Oregon at the Cumulus stations with Julia Carlson, the CEO of Financial Freedom Wealth Management. And we are on Super Talk 1570. Julia, we've been discussing a lot today. We've been discussing getting out of debt and paying yourself first. And we've also wanted to talk about being emotionally ready to retire. And this is a big thing. I actually wrote a big piece on this in my book about, a situation I had with one of my clients that I had a couple that had come to see me. And they came to see me because they were getting divorced and they wanted to do everything amicably and split things fairly. But the wife was really upset. And she said, she just kept saying, he decided to retire and he didn't tell me. And, him and his buddy on the golf course, which was the financial advisor that she had never met. And, he didn't decided to retire at 62 instead of 65. And, and there were a lot of consequences to that. And, some of the things that she was really upset about was the fact that they couldn't afford to go on vacation and they couldn't afford to spoil the grandkids anymore. And their lifestyle was pretty drastically cut. And so, unfortunately, they did get divorced, and the husband is still not remarried and pretty lonely, and misses his wife. And she got remarried, and she's actually having a pretty good time right now. But this is a big thing, retiring. One, are you emotionally ready? But also, is your spouse emotionally ready?
Yeah, absolutely. I think when you're thinking about actually retiring, just as important as it is to look at the financials, it's equally, if not more important, to look at the emotional aspect of it and how this is going to affect your spouse. I've got a great story too. It's actually my mom and dad, and my dad was a pilot. He was gone 2 weeks of every month from my childhood and growing up, and my mom had a pretty good way of life, both when he was home, but also when he was away. She was
a little bit of independence.
Yeah, she was very involved in her activities. And so now all of a sudden Dad is retired and he's home all the time, and her activities, she has to think about including him in all of those activities.
And that can be tough.
Yeah.
That can be really tough. You wrote an article that I loved called Are You Ready to Retire? And you talked about a lot of these issues. But you talked in this article about setting lifestyle goals. Do you want to touch upon that?
Sure. I mean, I think as we all are in our working time, in that passage of life, we do the same things every day. We drive the same way to work. We're creatures of habit. We, have a way of life that is, we're accustomed to. And now all of a sudden, I find that with retirees, there's about a 6-week honeymoon stage, if you will, where they're home they're excited, they're doing things. But then after 6 weeks, it's like they're wanting that structure again. And there's sometimes could be a depression period there of floundering and figuring out, what are we going to do in retirement?
Well, I think I've had clients, and I'm sure you have, that have experienced that depression where, they come in the office and I say, oh my gosh, how's retirement? And they say it sucks.
Yeah.
Sorry, can I say that on the radio? But they do. They say that it's not good. It's not what they thought it would be. They're bored, and it's like they went from having a purpose to not knowing what that purpose is anymore. So I think, everyone, a lot of people, not everyone, but most people dream of some sort of retirement or dream that they will retire, but they don't necessarily dream of what that's going to be like. And so I think that's really important. And as planners, when we're talking to clients, that has to be part of the discussion.
Absolutely. Our job, is to walk them through that and help them envision what that's going to look like.
And for spouses, you really can have two different versions of what each spouse thinks a good retirement is. I mean, I have some clients that take separate trips. They have different hobbies. So their version of retirement is very different from their spouse's. And our job, I think, is to figure out how that can fit together so that everyone's happy, but they're still also doing the things that they want to do and not feeling like they're held back.
Exactly. And I don't know if you've seen this, but maybe one spouse is ready to retire, the other one keeps working. Oftentimes I've seen this where the women maybe stayed at home while the kids were being raised, and now they go back to work. They love it. They're passionate about what they're doing. They don't want to retire, right? So now the husband is at home, and then there's possibly some shifting of roles, what's happening at home and the expectations.
Who's cooking dinner?
Exactly. And I've had some husbands totally take on that role, and, the wife is on cloud 9, and the other, it's more resentment. Like, I worked all day and I'm going to come home and now I need to cook dinner.
Well, and you also have the fact that now you're going from possibly a much higher income stream to a lower income stream. And for some, especially when we talk about the spenders and the savers and relationships, for some of those spenders, that's a really hard thing to comprehend and to really get used to. And it can really create a lot of emotional issues because either they can't go spend as much or they do continue to spend a lot more which then, of course, gets them into debt or makes it so that they're running out of their retirement savings when they shouldn't have been necessarily.
Yeah, I mean, you really want to think through your standard of living. And so I hear, oh, we won't need that much when we retire.
Oh my gosh, I hear that so often.
Yeah, and in reality,
or I won't live that long.
Yeah. And you really need to plan on probably making, 90% of what you're making in the working world, to be pretty realistic.
Well, I think some of the things that people don't think about is once you retire, you've got all this. Well, most of my retirees that are happy say, I don't know how I ever worked. I had, I'm so busy, but you want to do different things. And so a lot of my clients, they may have $5, $10, $15, $20, $30,000 a year travel budgets because that's what they want to go do. So when you really think about all the things you want to do and how much if you're a hunter, how much is that going to cost?
Yeah.
Different hobbies that you have. And so if you're not talking about what you want your lifestyle to look like with your financial planner, then they really can't tell you whether you're on track to retire or not.
Yes. We have a great tool that we have all of our pre-retirees that are getting ready to retire. We have a cash flow worksheet. Maybe we could put that on your website.
Yes, we could.
And that way it just helps the husband and wife to sit down and talk about, what their expenses are going to be realistically in retirement.
Well, and one of the things too is the taxes. I think a lot of retirees are really shocked at the taxes that they have to pay. And we're going to talk more about this in the next segment. But a lot of retirees come to me and say, well, I'm not going to have to pay anything on my Social Security. And Julia, we both know,
yes,
you want to pay taxes on your Social Security.
Yeah, because if you're not, that means you're pretty much at poverty.
And then who wants to be at poverty level?
Right.
I mean, so the way that Social Security works is up to 50% of your income could be taxed. Sorry, minimum 0%, 50%, or up to 85% could get taxed. And so most of my clients have 85% of their Social Security taxed. And they complain about it, but I say, you really do want to pay that tax because otherwise you are in poverty and you can't do this, or this.
Yeah.
But retirement accounts, we talked earlier about the benefit of a Roth. And this is where, Roth IRA money can really become beneficial because now you're able to pull money out that's not being taxed versus your other retirement plans that are just getting added to your income and making your tax situation worse.
Yeah, that's why I always recommend if you're able to put into a Roth and accumulate money in that tax-free bucket, that in the distribution plan of your retirement years, it's going to be huge. And I know we're going to talk about taxes in our last segment, but it's just pretty powerful if you have options of where you want to pull money from in retirement. So you would have Social Security, you're going to have maybe income from a Roth IRA, income from your employer-sponsored plan. If you had a pension, so you just want options, and that will help you tax-wise.
And you want options that you don't have to pay Uncle Sam for.
Absolutely.
I'm not a fan of Uncle Sam. I'll say it again. So, Julia, one of the things that I think is really important for us to stress here is the fact that you really, really have to start planning. And, it's never too early to start planning. It's never too early to start talking with your spouse or your partner, or just even in your own mind, if you don't have a spouse or a partner, really start thinking about what you want retirement to look like. And really, what are the things that you envision doing and being in retirement? Because you don't want to retire and then all of a sudden you just feel like you don't have a purpose. Because you do, and there's lots of things you could do, but sometimes it takes a little work to figure out what that is.
Yeah, and I think that's what we do so well as planners is we kind of sit down with our clients and help them, draw or map out what their compelling future could be for them and get them excited about it.
Because it is exciting. I mean, you've worked your whole life, you've saved your whole life, and I think one of the funnest parts of my job is when I get to have a client come in and say, yeah, you're set. You can do this. And, I'm not worried about you, because there are times that, say to clients, I don't think you should retire. And that's, of course, not ever a fun conversation. But it's so rewarding for us when we were able to say, yes, you know what, you can retire, and I'm confident you can do that. So when we get back, we're going to talk more about tax strategies for 2015. And again, I want to thank our sponsors, Rebecca Bartley with Icon Mortgage Lending, Christy Candleberry with the Christy Candleberry team at RE/MAX Grand, and Jason Orton with the David Chapman Agency. You're listening to the Margie Shard Show on Super Talk 1570. Stay tuned when Julia Carlson and I return.
Shard Financial presents Backpack Night, March 5th at 6 p.m. at the Holiday Inn Gateway Center, sponsored by Chassé Ballroom and Latin Dance Studio of Fenton. Backpack Night is a fundraiser for a project of the Food Bank of Eastern Michigan, providing over 15,000 hungry children in Genesee County with a backpack that contains breakfast, lunch, and dinner each weekend and throughout the summer. You can help. Join us for Backpack Night, where you'll enjoy a strolling dinner, a fashion show, a comedy show, live and silent auctions, and more. Call 810-577-5291 or go to backpacknight.com for more information. Margie Shard and her team can help you through life's transitions. Whether it's retirement, widowhood, divorce, or remarriage, call 810-714-5566 for a free consultation. With Shard Financial, you'll get answers and results. Her office is at 1537 North Leroy Street in Fenton. Log on to her website at shardfinancial.com or call 810-714-5566 today. Securities and advisory services offered through LPL Financial, a registered investment advisor member, FINRA SIPC.
Looking for a mortgage loan and need someone that you can trust with the biggest financial decision that your family will make? Hi, I'm Rebecca Bartley from Icon Mortgage, and I have 17 years of experience in this business. I offer on-the-spot pre-approvals so that you can start the search for your new home. From zero-down rural development loans to conventional and veterans loans, I can make it quick, simple, and all understandable. Put your trust in me, Rebecca Bartley, and call me today to take that first step toward home ownership. You can reach me at 810-516-4227 or go to my website at RebeccaBartley.com.
Stand out from your competition with a custom-made dynamic website from Shard Marketing and Branding, your small business marketing solution. Whether it's website design, social media management, referral marketing, event management, graphic design, community engagement, and business development services, Shard Marketing and Branding is your small business marketing solution. Call 810-577-5291 or log on to shardmb.com today.
Welcome back to the Margie Shard Show on Super Talk 1570. I'm Margie Shard. I'm in the studio in Eugene, Oregon with Julia Carlson, the CEO of Financial Freedom Wealth Management. And Julia and I have been talking all day about behavioral finance, which includes making sure you get out of debt, paying yourself first. We've been talking about retirement and why it's really important that you emotionally are ready to retire. But right now, what we want to talk about are some tax strategies for 2015, because as everybody knows, and as I've stated time and time again, I am not Uncle Sam's friend. I do not like Uncle Sam, and I want to know always what I can be doing to avoid paying more in taxes, legally, of course. So one of the things, Julia, you and I both require our clients, we want them to bring in their tax returns, and there's some reasons for that. But one of the things that I think is really important is that clients know what tax bracket they're in. And, you've got a really great way of explaining how to figure out what tax bracket you're in.
Yeah, and I absolutely agree. I want to see my clients' tax returns at that first appointment when I'm sitting down with them to understand their picture, their financial picture. And if the top page of the 1040, so this is your tax return that you're filing, the top 2 pages will kind of give you a snapshot of what your tax picture is. And if you pull that out and just remember line 43. So line 43 on that will tell you what your taxable income, what tax bracket you're falling into. And for most married filing jointly, if you're under $73,800, you're going to fall into typically the 10 or 15% bracket. Most are in that 15% bracket. And in 2014, when we went through the new tax law changes, that 15% tax bracket retained the 0% capital gains rate. So, and then above those, you go into the 25, 28% 28% brackets. And then all the way up, they added a new tax bracket at 39%. Along with some other wonderful
well,
things
and yeah, I mean, I think the thing that the fiscal cliff did is it really put a lot of new tax laws into law, which really people, I mean, CPAs and financial professionals like us, it took us about a year to really figure out what exactly they put in there. I mean, it was hidden stuff, and when we look at all the different taxes that can be added to your tax bracket, you really can be paying more than what your tax bracket is.
Yeah, exactly. That's why it's so important to know that number. So if you're looking at line 43, then you want to look at the tax brackets, and maybe we can put the tax brackets up on your website as well. That way you can go in there and really look at what your actual tax bracket is, because that's going to tell you how much of these additional taxes that went into play, the net investment income tax, or the Medicare surtax, and how these other things are going to affect you.
Well, and clients always want to know, Margie, why do you need my tax return? And I think the important thing is we are looking for tax inefficiencies. We want to know, how much are you paying because of your investment income, and what can we be doing with your portfolio so that you're not, basically having to pay more money to Uncle Sam on typically money that you're not even seeing in your pocket. Mm-hmm. I mean, it's some of it seems like it's phantom money, really.
It is. And the way that if you have money outside of your retirement accounts, those can, if they're not being managed appropriately, those can be killers on taxes.
Well, and when you look at the new, the Medicare tax that they added, they're now adding up the net investment income. So they're adding up your dividends, whether they're qualified or not, your interest, your capital gains, both short-term and long-term. And that can really throw you into it can add another almost 5% to your taxable income. And that's pretty costly. So, we're really trying to make sure that we are taking, the investments that we want to put in your portfolio that are going to be creating net investment income. We want to put those in your sheltered accounts like your IRAs or possibly your Roths. And then on your taxable accounts, use more investments that aren't going to create that net investment income, so we can keep that down low and save you almost 5%.
Exactly. So those would be, tax efficient funds, low turnover. It's not creating a lot of those taxable events showing up on your tax return each year.
So one of the things we also have to really be aware of for our clients in those taxable accounts are when we decide we want to buy or sell. It's important to know what we're buying in those accounts, but also when we're selling investments, we need to know, are they short-term gains? Are they long-term gains? And then, are we able to net anything out, any losses against gains for the year? Because sometimes it makes sense to hold on to that investment, maybe sell a portion of it off, and wait until the next calendar year, and so you're not realizing everything all at once. Or maybe, I have several clients that, they were looking for tax losses this year because they were trying to get down into a lower tax bracket. So we were actually trying to see if there were any losses, which, was a little bit more challenging this year just because we've had so many good years on the market the last few years. But I think that's really important when we're managing portfolios.
Yeah, I think that's something that I include always in the year-end planning. It's usually about November, December. We're doing tax harvesting,
Yes.
the gains and losses, and matching those up to make sure that we're creating the most tax-efficient portfolio for our clients.
Well, and I know it's really important during that time as well that clients are allowing us to speak with their CPAs so that we know what, that they're doing tax planning with the CPAs as well. Because, if you get to the end of the year and now we go into the new year and you haven't done tax planning, you may have lost a lot of opportunities to really reduce your overall taxes.
Yeah, I think the secret to this all is being proactive, and especially when CPAs are very good at almost being reactive. It's like you're sending them the information at tax time with 1,000 other clients, and they're just getting the taxes done. So it's not the time really for tax planning. Tax planning should be done, ahead of time, and a great financial planner is going to have a relationship with your CPA. So you
Absolutely.
guys can be on a team and work together on
Absolutely.
creating the best end result for the client.
we don't have a lot of time here, but one of the things I want to touch on as well is with a lot of small business owners, I see a lot of small business owners that come into me and they have really great businesses, but they're still set up as just a DBA or, a sole proprietor, which means they're paying on top of their tax bracket another 15.3%. Where if, maybe they would be setting up an LLC with an S election or an S corp, they'd be able to take a portion of their earnings and avoid that extra 15.3%. So, I think business owners especially need to be doing planning pretty much all year round. I mean, there's a lot that goes into it, and just by creating different entities, you can avoid some substantial taxes.
Absolutely, yes. And again, putting those small business retirement plans in place are going to help, offset taxes tremendously if you're self-employed or have a S corp.
Well, and one of the things, I know we talked about the 401k, but for small business owners to have that 401k that has that profit sharing bucket, to be able to every year decide, and you get to decide this after the year. So right now, we're deciding what our profit sharing is going to be for Shard Financial, where for 2014, even though we're in 2015. And what it allows me to do is say, nope, I'm going to give myself and my employees money in our profit sharing bucket and not Uncle Sam, which of course I love to do.
Absolutely.
So there's a lot of things. I think one of the things too is you've got to have your retirement plans, if you're a small business owner, a lot of times set up by October 1st of the previous year. So if you want that 401k, it's got to be set up by October 1st, or you're not going to be able to use it until the following year.
Yeah, the only one that you can do kind of after the fact would be a SEP IRA. A SEP IRA, you're allowed to open all the way up to your tax filing. So if you file an extension, you're able to make contributions into that all the way up to that date.
And one of the things we do have to mention about the SEP, though, is if you have a lot of employees, you probably don't want to do a SEP, because any percent of your income, let's say you give yourself 10% of your income into the plan, you've got to give every single employee 10% of their income into the plan. It's all employer funded money. And so it is really important that you're not making decisions by the seat of your pants on this. It is really important that you're talking with your financial planner and really looking at what is the best plan for you and for your employees and for your business and your overall tax structure. And what's going to give you also the flexibilities of the plan, because one of the things I know a while back, a lot of people used to have pensions, and the reason they don't is a lot of those pensions weren't as flexible as maybe they needed them to be. So there's a lot of things that you can do. It's just making sure that you know what you're getting yourself into, and also how to best utilize those plans to your benefit.
Exactly. And a lot of the times that comes down to looking at the tax return again. So let's say you're at $80,000 is your taxable income. So you're about, if 73,000 is the top of the 15% bracket, if you were just to turn around and put, $5,000 into a plan and defer that income, now you're going to be in the 15% tax bracket, and you're going to save, some in taxes.
Substantial amounts of money.
Absolutely.
So, well, Julia, I've enjoyed my time in Oregon, and thank you for having me out here to talk about my book, my first stop on my book tour. So it's
been fantastic to have you.
And I want to thank again Cumulus out in Eugene, Oregon. And you're listening to the Margie Shard Show on Super Talk 1570. Thanks again to our sponsors, Rebecca Bartley with Icon Mortgage Lending, Christy Candleberry, the Christy Candleberry team at RE/MAX Grand, and Jason Orton with the David Chapman Agency. Loved my time out here in Oregon, and I look forward to talking to all of you next week. Thanks again.